Welcome to Bloomberg. Quint, we're here to give you a quick gist of everything that transpired in the markets today. Well, the Nifty did pair some losses to end above 9,900, even as South Korea said that North Korea was preparing for a possible ICBM launch, which actually spooked global markets. So Asian markets and Indian markets reacted in line, seeing significant losses. But however, Nifty's losses were capped at 0.6% after falling as much as 1.1% at the lowest point of the day. Now, all sectoral indices barring media and metals were actually trading in the red. Media metals also fluctuated between gains and losses through the session. With that, let's invite Shahina Muqaddam, independent market expert, to join us on this conversation. Hi, thank you for coming down, Shahina. Shahina, what's your view on the market now, especially in the backdrop of all these geopolitical tensions?
See, on one hand, we are finding it difficult to cross the 10,000 plus mark. That's a resistance. And on the downside, I think the geopolitical risk is actually going to keep the market pretty soft. So while I would have actually thought that we are in a consolidation phase, I think if there is any negative, spiral on the international front, we may see the market move lower. So I would, as of now, have a slightly avoid or a negative bias.
Okay. Any safe places that you see where one can hide, or any buying opportunities given the correction? Of course, the correction is absolutely minor, 2% from those all-time highs that we had seen on the Nifty. But any safe places to hide, or you would completely avoid fresh buying at this?
I would look to lower levels to buy, because while the correction as of now is low, I think it is possible, there's a lot of tensions on the international front. It is possible we may see lower levels, and I think the lower levels could be as low as another 100, 150 points on the Nifty. So I would be very comfortable buying in at those levels, provided things don't de-escalate further, or things de-escalate from those on. I would look at buying at lower levels. See, I think stocks which would have potential to benefit from any international problems would be oil. I think we've already seen oil prices firm up substantially. I think in Singapore, GRMs are much higher. I think even on a 1.5 year basis, it's it's the highest level currently. And Reliance, normally does better than the Singapore GRM. So I think the next quarter, we are close to the end of the quarter, but next quarter would be a good quarter for oil companies. So I think oil companies across the board should do decent. So I would be a buyer in dips and Reliance. I think it's got everything going for it. Another sector I would probably look at would be autos, where I think things have been good, but valuations are high. So I would sort of take the corrections to bite in.
All right. So if we look at what really moved the Nifty index today, you had Coal India, Bosch and Sun Pharmaceutical, which were leading the gainer. Sun Pharma, of course, saw a big spike coming in the last half an hour of trade. On the losing end, you had Indian Oil, ACC and Adani Ports, which were significant losers, losing anywhere between 2.5% to 4%. And it was not just Adani Ports, it's the entire Adani group of companies which were seeing losses today. Any thoughts on metal names, Shahina? Because the likes of Hindalco, Vedanta just continue to climb despite what's happening in the markets.
Yeah, despite they having done so well, I still continue to have a positive outlook on the metal sector, because as you see, metal prices are ruling pretty firm. And I think with the demand in China, some closures happening in China, I think these overall metal prices should remain firm. And I think the Indian companies, let us take Hindalco. Last quarter, we saw very disappointing numbers despite the subsidiary doing well. So I think as of now, I would be positive on Hindalco. I think from here on, both volume as well as stabilization in terms of realizations, better value should accrue. They are doing a lot of balance sheet work. So I think the overall number should improve, balance sheet should look better. So I would be a buy in Hindalco. I think Vedanta is another one good pick, though it's already, these stocks have performed multi-baggers, but at the same time, I think even from here on, given the two, Vedanta as well as Hindustan Zinc, if you see the two entities combined together with prices ruling firm, I think there is another pocket. I would remain positive on the overall metal pack. And the last is Tata Steel, which has also started looking good, given the fact that I think even ferrous prices are relatively strong, with the government protecting it. So I think all in all, metals still remains a good buy.
Alright, so it's time to move to commodities, at least in the short term it seems.
I would say it's a mix. Commodities, auto, which is consumer, and then again you have FMCG. I think it's a mix. One needs to do bottom picking and, in such markets.
All right, fair enough. That apart, if we look at what was happening in the broader markets, you had the advanced decline ratio absolutely discouraging at about 2:5, 2 gainers for every 5 losers. And nevertheless, despite those weak sentiments, as many as 23 stocks were actually hit their 52-week high. So you had the likes of GMT Auto, which rallied about 11%. You had JBF Industries, Himachal Futuristic also making a fresh 52-week high. You had Bombay Dyeing hitting a 10% upper circuit, and you also had the likes of textiles like Raymond and Kitex Garments, Arvind, etc., which were seeing some good gains coming in. I don't know, Sheena, do you really track Bombay Dyeing? Because that's one stock which has risen as much as 45% in the last 5 days. I mean, I don't know what's buzzing. There's a lot of rumors surrounding that counter, but do you track it?
Yeah, I mean, not in absolute detail, but yes, I think I continue to like Bombay Dyeing, though I would say it's doubled if you take a little longer term frame. From 70, then it was 90, and now it's like almost, at 120, 130, between 130, 140. I think there it's got a couple of things going for it. One is it's got 2 huge land parcels, clear title, which I think will really add value going forward in FY18 in the current year when they monetize it. That is right in Mumbai Central and BKC. So I think this is going to really value add to the overall I would say market cap. And I think in terms of balance sheet also, it's not aggressive. It doesn't have any aggressive debt. I think it's well capitalized. So to that extent, I still see an upside. Though it has doubled, I still see it moving up from here. So I would be positive despite it having moved up significantly in the last couple of days.
All right. So if we also have a look at the losers on the Nifty 500 index, you had Quality, which saw a sudden fall and it breached a 20% lower circuit today. That apart, of course, Adani Group companies were trading weaker. Reliance Capital lost about 4.5% as this housing finance arm, gets ready for the demerger. Of course, the ex-date is tomorrow. Shaina, any thoughts on Reliance Capital? Of course, you have Reliance Home Finance, which will get demerged. Plus, they're also preparing for an IPO for the asset management company, plus the general insurance company. So, how does Reliance Capital look at it?
I think Reliance Capital is another case where you've seen a multi-bagger return if you take a little longer time frame. But here again, I see an upside despite it having performed, because I think all the businesses that we spoke about, like you have the housing business, I think there itself, the stock could be valued around at 350. I mean, I would look at that sort of a value in terms of rupees per share. There again, you have your insurance business, which is I think equally valuable, and then you have the other like mutual fund. They have a lot of investments. So I think all in all, if you put all the businesses together, also I think there is still upside. I would say at least a 15% upside, even in the shorter term from here on, like another 6 months. So I would definitely, if I'm an investor, I would continue holding despite movements in the market. And at dips, if we get a good correction, I would be a buyer.
All right. And last but not the least, the new kid on the block, Apex Frozen Foods, ended about 20% higher over its issue price. Any views on Apex Frozen Food post the kind of listing gains that we've seen on that?
I definitely wouldn't buy in at at what 20% today. It was 20% higher. I wouldn't be buying at these levels. But I think the overall business in terms of frozen, I mean, if you look at refrigeration and frozen foods, I think to that extent, and they're targeting the international markets in a large way. So I think there's a lot of market valuations. I would wait for better valuations. I think it is more or less priced in, but yeah, corrections we can look. I like the business. I don't like the valuations that much.
All right. Thank you for joining us, Shaina. Shaina's recommendation, certain oil and gas and also metal stocks continue to look strong. She still expects a significant upside as far as Reliance Capital or Bombay Dyeing is concerned. With that, we come to an end to this session of Market Trap, but you can always log on to bloombergquint.com for more updates. Thank you for watching.